Why do we need to know about this? Well, because the progressive rate structure fits in with our marginal tax rates. When we're talking about marginal tax rates, it's the rate at which the last dollar of taxable income is subject to tax. So, for example, actually I probably want to go back, but, oh well, I'll use this. I like it had the table up there, and I'd like to be able to use that, but we'll use this right here. So when people say they're in like the 37% tax bracket, you shouldn't feel too sorry for them. You probably shouldn't feel too sorry for them anyway, because they're probably making pretty good money. They may have other reasons to feel sorry for them, but not all of their income is being taxed at that 37% tax bracket. That is their marginal tax bracket. So the very last dollar of their income that they earned is being taxed at 37%, but that doesn't mean that all of their income is being taxed at 37%, right? So again, marginal tax rate on the last dollar of taxable income. And I'm saying taxable because not all income is taxable. We're going to find out about certain types of income that aren't taxable, and then we're also going to find out about certain deductions that reduce our gross income to arrive at our taxable income. Okay, so even if your total income is $100,000, that doesn't mean that that entire $100,000 is taxable income. In fact, it's not going to be all taxable income because we're going to subtract some deductions and things along the way. So here's a good, I guess, an illustration here. We got Ben and Martha. You know what, I want to make this a little bit bigger so you guys can see it better. Sorry, that was bigger ones. Okay, so here we've got Ben and Martha. They've got taxable income of $49,975. So when it says taxable, we've already subtracted any deductions that they're entitled to. Okay, it's important that you read those words and how it's described, what the income is. You're going to find in your problems, your homework problems, sometimes it will say total income, sometimes it will say gross income, sometimes it will say taxable income. If it says taxable, you can know that they've already subtracted any of those deductions. But if it's total income, you're going to have to subtract some deductions. Okay, so it is important to get that wording down and to pay close attention to how that income is described. Right? So they say this is taxable income, $49,975. They are filing as a married couple. We're going to talk about why that's important as well, that filing status. Using the previous tax rates, this is their tax liability. So we're going to remember, the range was for the first $22,000 from 0 taxable income to $22,000 taxable income was in the marginal 10% tax bracket, right? So that first $22,000 of income is subject to 10%. So they're going to pay $2,200 of tax on that first $22,000. But they made more than $22,000. So that puts them into the next marginal tax bracket, which is 12%. They're not in the third marginal tax bracket, which is a big jump, I think up to 22%, 22, 24, I can't remember off the top of my head. There's a big jump. This is a pretty small jump. The next one is a much bigger jump. But we need to find out how much of their income is in that bracket. We do that by taking their total taxable income and subtracting the top number from the previous marginal bracket. Okay, so we know $49,975 minus $22,000. They didn't give us the answer to that, but you multiply that by the next marginal percentage that they fall in. So within that bracket, they owe $33.57 of taxes. Then we add the two together. Now you'll notice that their total tax liability of $55,57 is not going to be 12% of their total income. To find out their average tax rate, we're going to take their total tax liability and divide it by their taxable income. So if somebody wants to do that math, they probably did it here, but let's not look ahead. So in this case, what, 55,57 divided by 49,975? What does that get us? 11%. 11.1%. So this is their average tax rate. Their marginal tax rate, the last dollar of their income, which would be their $49,975 that they earn, is in the 12% tax bracket. But their average tax rate is 11.1%. That difference, you'll see when you do the calculations, the higher the income goes, the bigger that difference is going to be between the marginal and the average. And it's simply because of those lower bracket amounts. Questions about average versus marginal? You do have homework questions. I think you got some test questions as well on the difference between those two. Okay. And the other, it's important to understand the difference because, when as they mentioned here, like, it's more sensational to talk about the marginal bracket. 37% is more sensational than to actually do the math and figure out, well, actually on average they're paying, 21% of their income in income taxes. Not that that's a small amount, it is a big amount, especially when you consider how many more taxes and other taxes there are out there on top of income taxes, but there is a big difference. There can be a big difference between the two, and the difference between the two gets higher the higher the income and the higher the marginal tax bracket. Oh, let's see. It's the same thing. Any questions? No? All right, let's move on.